Okay, get ready for this because for the first time in over 60 years, India's entire income tax system is getting a complete rewrite. And no, this isn't just some small update. We're talking about a ground-up overhaul that's going to affect how more than 400 million of us manage our money. So the big question is, what does this new 2026 Income Tax Act really mean for your wallet? Let's dive in and find out.
You know, when you hear a new tax law, your brain probably jumps to more complexity, more headaches, right? But believe it or not, this new act is actually designed to do the complete opposite. The whole idea is to take a system that felt, let's be honest, kind of scary, and turn it into something that brings a sense of relief and clarity to your financial life.
So why the huge shakeup now? Well, it all comes down to the old Income Tax Act of 1961. Think of it like a dusty, old filing cabinet in the corner of an office, just overflowing with papers from a totally different era. That was basically our tax code. It was built for a post-independence economy, and it was just not equipped to handle our modern digital world.
Over the decades, that old law just got bigger and bigger. It ballooned into this confusing maze of over 800 different sections, full of jargon and weird patches. I mean, if you were a YouTuber or a gig worker or investing in crypto, the old law just had no clear answers for you. And that, of course, led to endless confusion and legal battles.
And that's where the Income Tax Act of 2026 comes in. This is not just another patch. It's a complete rewrite. It takes all those 800-plus complicated sections and streamlines them down into a much leaner, much more logical 536. It's like we're finally throwing out that ancient filing cabinet and upgrading to a clean, modern digital system that's actually built for today.
So let's get to the good stuff. What is the single biggest change for the average person like you and me? Well, it's a massive, and I mean massive, increase in how much money you can earn before you have to pay even a single rupee in tax. This is where the new regime really shines. Just look at the difference here. It's staggering. Under the old system, you started paying tax once you earned just 2.5 lakh. But under the new regime, thanks to a combination of a higher basic exemption and a really generous tax rebate, which is basically a direct discount on your tax, you can now earn up to 12 lakh rupees and have zero tax liability. That is an absolute game changer for millions of people.
And this brings us to what is probably the single most important decision you're going to have to make when it comes to your taxes. Do you stick with the old, familiar regime with all its deductions, or do you make the switch to the new one? Understanding this choice is absolutely crucial.
So here's the fundamental trade-off, laid out plain and simple. The new regime gives you much lower tax rates and that huge tax-free window we just talked about. The catch? You have to give up most of the major deductions, like for your home loan or investments under Section 80C. On the other hand, the old regime lets you keep all those deductions, but you're stuck with higher tax rates.
Okay, theory is one thing, but let's make this real. Let's take a look at an example. We'll call him Rajesh. He's a salaried professional and he earns 15 lakh rupees a year. Let's see how his final tax bill changes depending on which regime he picks.
All right, so under the old regime, Rajesh takes full advantage of his deductions. He's got his home loan interest, his PPF and insurance investments, a few other things. It all adds up to over 3.5 lakh in deductions. That brings his taxable income way down, and his final tax comes out to 1,41,500 rupees.
Now let's see what happens when we switch him to the new regime. He can't claim any of those deductions, zero. So his taxable income stays at the full 15 lakh. But, and this is the big but, the tax rates themselves are so much lower. And look at that final number. His tax bill drops to just 60,000 rupees.
That is an annual saving of 81,500 rupees, just by flipping a switch. And Rajesh is not some special case. This right here is exactly why a reported 80% of taxpayers have already made the jump to the new system. For most people, the savings are just too big to pass up.
But, you know, this 2026 Act is about way more than just new tax rates. It also rolls out some really smart upgrades to the whole system, designed to cut through the old confusion and just make life a whole lot easier for all of us. And here's one of the best changes, seriously. It's the new tax year concept. For decades, we've all been scratching our heads over previous year versus assessment year. Well, the new Act just scraps all of that. Now there's just one simple term, the tax year. The year you earn your income is the same year you compute and file for it. So simple, so logical, finally.
Let me ask you a question, and be honest. Have you ever maybe missed that July 31st tax deadline? It happens to the best of us. But in the past, if you filed late and you were actually owed a refund, you were just out of luck. The old rules were really strict about it.
Well, check this out. This is a fantastic change in the new law. You can no longer be denied a refund that you are rightfully owed just because you filed late. So if your employer deducted a little too much tax from your salary during the year, you can now claim that money back no matter what. It's a quiet change, but it's a huge win for so many people.
The new act also, finally, clears up all the confusion around crypto and other digital assets. That legal gray area is gone. The rules are now pretty straightforward. If you hold an asset for less than 2 years, your profit gets taxed just like your regular income. But if you hold it for 2 years or more, you get to take advantage of the lower long-term capital gains tax rates.
Okay, so with all of these big changes coming down the pipeline, the real question is, what should you be doing right now to get ready? Well, here is a simple 3-step action plan to prepare for that April 1st, 2026 transition.
First, audit your deductions. Sit down, figure out exactly what you can claim, and then plug those numbers into an online tax calculator. See which regime actually saves you more money. Second, plan your asset sales. If you're into crypto, be strategic. Plan your sales around that 24-month holding period to minimize your tax hit. And third, talk to your employer. Just a quick chat to make sure their payroll system is ready for the new tax year can save you from any headaches with your salary deduction.
At the end of the day, this new tax act is a huge step forward. It's designed to bring India's laws into the modern world, to simplify your life, bring clarity to your finances, and for most of us, save a good chunk of money. The only question left is, are you ready? Is your financial plan ready for 2026?